Okay, let's jump right into this explainer and completely flip the script on how you look at support and resistance levels. Look, nearly 90% of amateur traders completely wipe out their accounts in the very first year. Why? Usually, it's because their charts look more like a chaotic spider web than a clear roadmap to profit. If that sounds even a little bit familiar, you are in the exact right place. Today, we're cracking open the professional trader's playbook to zero in on the only key zones that actually matter. Now, what's literally mind-blowing about this is that most folks sabotage their own trades before they even click buy. 99% of traders get support and resistance completely wrong. And why does this matter so much? Because nailing these key levels hands you a high win rate opportunity right on a silver platter. But instead of seeing that crystal clear setup, most traders, they just see a wall of confusion. Just look at the amateur's approach. They draw 10,000 confusing lines, tracking every single tiny bounce from, ancient history. They kind of think more lines mean more data, right? But patient professionals know the exact opposite is true. The pro's chart is clean. It is laser-focused only on recent, highly relevant price zones. Look, if you're just starting your journey here, the whole goal is to simplify these complex patterns, not give yourself a massive headache. So here's how we're going to break down the professional playbook today to clean up that chart of yours. First, the messy chart mistake. Second, the 4 rules for key zones. Third, the 3 trade confirmations. And finally, executing the perfect setup. All right, section 1, the messy chart mistake. Let's tackle the absolute most disastrous error traders make right out of the gate. Seriously, stop trading ancient history. I see this all the time. If you're drawing lines from the time of the dinosaurs, like levels from a year ago or 10 years ago, you aren't trading. You're literally on an archaeological dig. If the current price is nowhere near those old levels, they're completely irrelevant. We only care about the levels that matter right now, right in the immediate neighborhood of where the price is actively moving. Moving on to section 2, the 4 rules for key zones. The crucial step here is replacing all that messy guesswork with our 4 hard and fast rules. These 4 rules, they are your ultimate checklist for decluttering your chart and finding the areas that actually dictate market direction. We've got multiple rejections, significant moves, support becomes resistance, and staying near current price. Let's unpack these really quick. Rule number 1 is multiple rejections. If the price drops to a specific level, say 3 separate times and reverses back up, boom, you've got a highly valid support level. Same exact thing for resistance. When price keeps hitting a ceiling and gets smacked back down, it's waving a massive red flag at you. It's telling you, hey, there is a huge concentration of institutional sellers actively defending this exact price. But, what if you don't have multiple rejections yet? That brings us to rule number 2, significant moves. Even without those multiple touches, a massive, violent move away from a swing high or low lets you confidently mark a key level. I mean, if the price hits a point and just shoots straight up or drops like a rock, it proves heavy volume was injected at that precise moment. Which brings us to rule 3, and honestly, this might be the most powerful concept in trading. Support becomes resistance, and vice versa. And please remember, these are zones, not thin little single lines. Think of it like a multi-story building. When price finally smashes through a strong support floor, it almost always loops back around to retest it. And when it does, that old floor has magically transformed into your brand new ceiling, your new resistance zone. And rule 4 brings us right back to our anti-dinosaur policy. Keep it near the current price. When you're evaluating your live market charts today, please don't mark a level that's miles away from the current action. If price is stuck in a tight consolidation zone this afternoon, a support level from 6 months ago isn't going to help you execute a trade right now. Stay focused on the immediate relevant action. All right, section 3, the 3 trade confirmations. Let's shift gears to execution and see how a patient professional actually enters a trade. Now this is where amateur impatience absolutely destroys accounts. We never, and I mean absolutely never, enter a trade immediately on the very first touch of a key zone. Just because price hits your beautifully drawn support area doesn't mean it won't just crash right through it. Instead, the patient professional waits for 3 exact confirmations. 1, price reaches the key zone. 2, a clear reversal candlestick forms. And 3, a moving average crossover validates the momentum. Let's zoom in on that second confirmation for a second. The reversal candlestick. If price reaches your resistance ceiling, you want to spot a pattern like an evening star. That tells you sellers are aggressively taking the wheel. On the flip side, if price drops to your support floor, you're looking for a big, fat, green, bullish engulfing candle. That massive green body, that is your visual proof that buyers have flooded the zone and completely hijacked the momentum. And finally, your third confirmation, the moving average crossover. Think of the moving average as a dynamic line that tracks average price over time to sort of filter out all the random market noise. So you have the zone, you have the candlestick, but when that moving average line finally crosses over or under the candlesticks, it mathematically confirms the momentum has officially shifted. If the moving average dips below the candlesticks at support, your trend reversal is locked in. That is your ultimate green light. Which leads us perfectly to section 4, executing the perfect setup. We're in the trade, so let's talk risk management. This framework right here is your professional guide for protecting your capital and actually securing your profits. It breaks down exactly where to put your stop loss and your take profit. You really need to treat these rules as absolute law if you want to survive in these markets long term. Let's start with the stop loss. Amateurs love to set a super tight stop right on the line. And what happens? Price naturally pokes slightly past the zone to retest it, kicks them out of a winning trade, and then goes in their direction. You must place your stop loss just outside the entire zone to give it some breathing room. Actually, an advanced technique for highly volatile markets is to use an indicator like the average true range, or ATR. That lets you mathematically calculate exactly how much extra breathing room you need based on that specific day's market chaos. Now, what about getting paid? You place your take profit at the very next historical key level. Say you entered a buy trade at support. Just look to the left of your chart. Where is the next major area that previously acted as resistance? Boom, that is your target. By setting your take profit at the next major historical zone, you're securing the maximum logical payout for your disciplined setup instead of just wildly guessing when to get out. This quote really hits the nail on the head for the professional mindset. Remember, you're just one trade away. Look, it's not about making 100 chaotic, stressful trades a day. It's about keeping things incredibly simple. Clean up your chart, respect those zones, wait patiently for your 3 confirmations. You are literally just one disciplined, well-executed trade away from changing your entire trajectory. So I'm going to leave you with this final thought. Next time you fire up your live charts and your finger is just hovering over that mouse, honestly, ask yourself, are you patiently waiting for your 3 confirmations at a key zone, or are you just gambling on a messy chart because of FOMO? Mastering support and resistance isn't just about drawing boxes on a screen. It's about mastering your own patience. Choose discipline.